All right, good morning. Welcome back here to Trader Minute. Great to have you aboard. I'm not going to walk through all the events here last night in the trade war. He said, she said, he's coming, she's coming type of element here. You can see after the bell yesterday, S&P futures dropped immediately and stayed down here around 29.15 until the European session opened, and then we saw a pop, and that has been faded here the entire early morning for most of us. But you can see S&P set to open up, kind of a little bit higher than where it opened yesterday, about 20 points above yesterday and about 20 points below. And, just kind of in the middle of nothing. Now, yesterday was asked, what do I need to see to start to really kind of build big positions? And, I have a few positions here and there, a couple things on the upside, a few things on the downside. I'm not very, what's the word for it, delta-centric, meaning I'm not very positioned for a big market rally or a big market drop. I'm pretty delta neutral there when it comes down to it. But, it is one of those where, okay, you know what? We see some shake out. We see some shake up. Where do you start to step in and put on, some sizable positions? Well, for me, this comes down to dust needing to settle. What do I mean by that? Well, let's go back to another round of negotiations that took place, and this was between Germany and Germany and Greece. Basically, Germany was the ECB or was the EU. They were the ones who had to approve. Everybody else already approved everything, and as long as Germany approved, everybody was on board, and a deal would get done to deal with Greece's debt crisis. So let's go back here to 2012, and let's make sure I have the right chart. There we go, 2012, and here we go. You'll notice we have some chop, right on through here. And this kind of just dicey, up one day, down another day, up one day, down another day type of action. Now, this was year 3 of the Greek debt crisis, and you see how choppy some things are. Big up day, 2 down days, big up day, down day, big gap down, up, 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 gap down, down, right? This is year 3 when the market's already used to the European kind of debt crisis, this whole Greek drama element, right? Let's go 1 year prior to when the market wasn't as used to it, when the market was a little more caught off guard by it, and here we go. We see this big drop right here, but then look at the chop. Look at the chop that happens. It's incredible chop. And it's chop where one day the market's down big, next day it's up big, next day it's down big, next day it's up big. There's no trend here. There's no charting technique that you can apply here in real time to say, hey, you know what, things are up, things are down. This was about the most certain of, technical elements that came in right here at the beginning of October. But this was a time of great chop, and what was driving some of these? Well, some of these 3% moves were driven by where Angela Merkel was going to have lunch. And you may think, that's ridiculous, that's silly. Where's she going to have lunch? Why would that? Yeah. Where she would have lunch. One day we saw S&P futures reverse 40 points on it. That was 4% back then on where she would have lunch because the market's trying to imply something into it about a deal. Right now, market's in this mode of, well, how many trade delegates are coming and which ones are coming? And, okay, are we going to have a deal? Are we not going to have a deal? And they're looking at all the periphery, all the little details to say, well, this is a positive sign, this is a negative sign, this is a negative sign, this is a positive sign. And some of them are downright silly. And that's not going to go away. That's not going to end this week. That's not going to, barring some sort of deal that happens, that element is not going to go away. And so we're going to have this period where there's going to be some incredible chop. And where we're going to see, what we saw yesterday, we're going to see gaps down. We're going to see big market rallies followed by big market sells. And that's the norm for this type of situation. Notice I said that's the norm. That's the normal, right? We could see something abnormal, but the normal for these types of situations is this type of chop. And given what the market has gone through this year, given some of the economics that are out there, this is my expectation of what we will see. And if no deal happens, the chop is going to lean to the downside. If a deal happens, the chop's going to lean to the upside. But, it's going to move. It's going to chop on, kind of some silly details. And so from a trader standpoint, you have to look at it and go, okay, if you're totally chart driven, if you're just completely chart driven, is there logic in that? Well, yeah, from a day trade standpoint, there absolutely is, right? In fact, from a day trade standpoint, there's actually more logic in using charts than what there has been. From a swing trade standpoint, is there as much logic? No, there's not as much logic. There's not as much logic in reading into, a reversal rally or a, gap down or some of those, typical things that, tend to suggest further follow through to one way or the other. And so from a longer-term position standpoint, dust needs to settle a little bit. There's a lot of dust that was kicked up yesterday, and it doesn't feel like it was the first day to kick up dust. And so there is a lot of dust that needs to settle. It doesn't mean you can't take some of your favorite stocks and say, hey, you know what, let's go. It doesn't mean you can't step in and go and play, a chart or two, but just understand what they are. Don't be surprised if, you have the most bullish chart in the world and all the odds are in your favor and, there's a headline that fewer Chinese delegates are coming, so the market gaps on down on you and, you're kind of left in the dust a little bit. Same on the downside, that type of thing. You're going to have that. You're going to have a lot of chop here with it. Now, what's one of the best ways to deal with something like this? Overbought, oversold. You oftentimes hear me say, hey, overbought doesn't mean it has to go down. Oversold doesn't mean it has to go up. And you're right. But in these types of dust-up environments, overbought, oversold tends to work a heck of a lot better. Right now, where the market's opening at, we're not really talking about overbought or oversold at this point, at this position. But if we see a strong sell-off here today and a gap down tomorrow, we would be talking about oversold, or some sort of strong rally today and gap up tomorrow. We'd be talking about overbought. And so, from a short-term trade standpoint, those overbought, oversold, strategies, they tend to work pretty well. But again, it's a lot of dust up in the air. It's a lot of unknowns. It's a lot of reaction to information that just, let's face it, is speculative and is information that not one person knows what's going to happen. There are a lot of theories, there are a lot of ideas, and there are a lot of contradicting theories from some very smart people out there in the market, and that's not going to go away. That is going to continue. And so, from an option trading standpoint, it always goes back to, no matter what the market's doing, risk-reward exposure. Risk-reward exposure. Right now, your reward factor is rising, but so is your risk factor, right? And so you have to kind of say, all right, what type of exposure do I want? And everybody's a little different, right? Yesterday I went and dipped a few places here and there, but very light exposure, stuff that, I wasn't going to have to wake up and go, oh, okay, it's going against me, what do I do? Or it's going for me, what do I do? I could just kind of be a lot calmer, take it off whenever, and run with it and have a much more casual, kind of relaxed look at it. And that is, for me, that's how I like to handle something like this. I will get big if we see overbought or oversold come in on a daily chart. But, we're not at risk of that happening here today or, probably the soonest that could happen is tomorrow morning. Okay. We do have some comments out of the IMF here this morning about the trade war and about the risks that it poses to the global economy. And, okay, great. Is it one of the reasons why futures bled? Yeah, it is. But even the head of the IMF said they're not sure how it's going to play out, right? And that's a pretty profound statement in terms of understanding this is a very fluid situation. We can guess on how it's going to play out. We can speculate on how it's going to play out. We can look at U.S. President Trump. We can look at his career and how he's dealt with trade negotiations in the past. And let's face it, some negotiations have fallen through. And when they fall through, there's a very what's the right word? It's a heavy blame game when you look at some of those. But not all of them fall through. In fact, many are made, and when they're made, they're fantastic, and they benefit both sides mainly. And there's a lot of celebrating. So, this is something that's fluid. It could go either way. Ultimately, I think there's a lot more trouble here than what meets the eye. But again, I'm not a trade war expert, and I'm not in the room there with the negotiations. But, when you look at the incentives on both sides, the incentives on the Chinese side are different than the incentives on the U.S. side, except for that incentive to save face. And if things get bad enough, both have incentive to come to the table and make an arrangement. But that's if they get bad enough. And right now, both sides are kind of talking from a position of relative prosperity. So not as much eagerness to cave or to give in to the other side. All right. Anyway, my thoughts here on things this morning. Now, yesterday, did a video talking about the upcoming 100K challenge. That is in the archive for yesterday. Feel free to go check that out. We'll kick that off on Thursday. Very much looking forward to that, especially with some of the dust up that has happened in this environment. It may mean maybe not too many signals right away, but definitely a needed element for the market to drive further signals in the future. And then we'll be getting back to the 30 Indicators of May series here today. Going to go out and take a look at 2 indicators. We'll do that a little bit later this morning after some of the market dust settles, after the market calms a little bit. I do want to, be watching and trading here a little bit this morning with that. But, when we get into kind of that lunchtime period, I'll jump on and we'll go take a look at 2 different indicators here today. Thanks for hopping on. Have yourselves a great one, and we'll talk to you later. Take care.